All right, hello everyone. You know what time it is right now. It's market muttering time. Market mutterings for February 4th. That's right, the first one of February. January, the first month of the year, is now behind us. I hope it was good for you. It was wild, to say the least, especially the last 2 months here in the market. We're going to talk about that. As always, if you guys need help with your trading, up there on the screen, visit our live trade room. You can start trading with us right away. And the DVD is out, rock solid, the 3 main trader components, and it is free. I'll also post a link somewhere up there on the screen for everyone. So let's start talking about this stuff. We'll go with the market here first. And this thing has shrugged off everything that was thrown at it. And then the only thing you can kind of come up with right now is whatever the thought was about when you're looking at the sell-off that occurred in December could probably be chalked up right now to interest rates, the threat of interest rates after that Fed meeting there. It got pretty aggressive to the downside, the possibilities of a slowing economy, the ongoing trade war with China, all this stuff was the reason. Now you come over here and you begin the year, and it's as if those reasons, they possibly could still be there. It's not bothering the market, because the way now it has been translated is that the Fed is going to lay down for the market and do whatever it has to do. And now the market is not pricing in any rate increases for this year. The trade war doesn't seem to be bothering anything because everybody's under the assumption a deal is going to get done by March 1st and it's going to be okay. And some of these earnings were not as bad as the street thought they were going to be. And you combine those together, and here we are, right back up where we started from. Now, this thing has almost retraced the entire December. Actually, it has. It has retraced all of the... Let's go back a little bit further, because I might be wrong about that. No, not quite. That would be 280. I think we were 280 there at the beginning of the December. So I take that back. But for the most part, this extreme sell-off that lasted 2 weeks is basically gone here. Now, right now, it doesn't look as if there's anything in the way here that's going to stop the SPY from getting back to 273, 274, which is the 200-day moving average. That would be my next thought here. You've had companies miss earnings. You've had companies guide lower, but for some reason, it does what it does, and that's what you're in. And this is one of the things. The reason I bring this stuff up and talk about this stuff every week is because I'm assuming many of you are aspiring to be really great traders, and this is one of the things you have to deal with. Is it doesn't always make sense. The market doesn't always make sense. As a matter of fact, it never makes sense. What should happen doesn't always happen. What you think happened probably does not happen. It's just that way. I mean, you had a bunch of earnings come out this week that weren't so good. Some of the stocks actually rallied. For a good example, this Caterpillar, guided much lower, was not that good. I'll pull it up here on the screen for you. And, it just dumps. It just gaps down from 136, goes all the way to 123. A few days later, it's just back into the gap. I mean, that's it. Just right back into the gap. Nothing changed here. Nothing changed whatsoever. Back into the gap. So that's where you are. I would have to say, because you're probably going to get a trade deal done in the month of February. The deadline's by March. And it doesn't matter if it's a good or a bad one. I don't think that's the issue right now. The issue is just get one done. Once it sinks in, if it's a bad one, then that's where the market will adjust itself. So let's kind of look at this here one more time. Put the SPY up there. Go for, right now, see if we start getting any types of resistances at 274. And if it's strong up there, then you might just go all the way back to the beginning of December. We actually might see 280 here in the near future. Now, let's say you start to see some selling. Maybe there's some news come out and the market decides, gets a wild hair up its rear and says, look, I want to sell. I want to sell off. That's what I want to do. Then you got to look at the 10 moving average down here, 265, and then maybe 263s, and then 263 to 265. If it doesn't go underneath of that, I expect no aggressive selling or no considerate change in the tempo. Keep an eye on the 50 moving average, which is sitting down about 259. Anything can change at any minute. But that's the way it looks right now. So I want to go over a few stocks here that do have some sort of potential to them here for you to trade. I want to start out with this MU. Let's go with some MU. This has looked pretty good. This thing was, you can see I had some lines already drawn up here. This thing was range bound here for the last week or so, which is a good thing considering a lot of these stocks bounced, and what you want to see, unless you're already long, you want to see them go up every day. But you'd like to see them, if you're not, to trade sideways for a little while and digest that initial move. And that's what it did. It gapped up here, and for the most part it held that range, and then finally Friday it squeezes up just a little bit. But the important thing is it closed above the $39 level, which was the spot it needed to get through. So now that it's above 39 to 39.32, you know, I would think as long as things stay the same, you got some room up into the resistance area of 41 bucks here, up into this spot going back to early November. And then you got the 200 moving average on this one sitting up here at 46. So you got 41 to 46 in this thing. Not a bad looking chart. Not a bad looking chart whatsoever here on this MU. So keep that one there on the front of your mind as a long. Now there's always these stocks like Twilio, WDAY. They get on these runs, man. I'll tell you what, it's like people must think they're never going to get a share of this thing. They just got to buy and buy and buy. This thing looked like it was done for the short term. It had a little double top up here. You see, I've talked about it before. Gets rejected, sells off $7 in one day. Then next day it's like, okay, we're back. And then it gaps up on news, and here it is just holding up its gap, following through. Now this thing is obviously short term a touch overbought. Not super overbought, but it's high. I mean, you know, you could have bought this thing at Christmas Eve for 144 bucks. Now you're at 180. But it's holding. So I think as long as it holds up here and you do not get any lower underneath the 180 and a half, which is the gap here, then this stock is probably going to consolidate and make another move higher. Now, maybe that's not something that happens at the beginning of the week, and that's not a tradable scenario. Maybe it is. Who knows? On the flip side of that, you can't rule out that if it does sell off or there is a tempo change in the market, that something like this could, and quite possibly, trade under that gap, in which I would think it would be a short down back into the gap. Just a couple way play there, but right now that thing is superbly, stupendously, nutso bullish here on this one. Now another one that does have my interest, which always has my interest just about every week, is Netflix. And I'll tell you what I'm seeing here with Netflix. This thing was an absolute animal for a couple of weeks. More than any of the other, like if you're a beta trader and you're doing the Apple, Facebook, Netflix, Google, Amazon, that kind of thing for your trading, this had, as far as the linear move, this was by far one of the stronger ones that you were going to run into, you know, outpacing it from Christmas Eve bounce. I mean, this thing just went nuts. I mean, look at it. It was down here at 233 and just was nonstop to 355. I mean, it's a monstrous move. Well, their earnings didn't really come across that well, or at least they weren't translated into justifying the stock price. Stock gets beat up pretty good. Now, that's not the only time we've seen it. Like I showed you, Caterpillar did that. There were other companies that weren't that good with their earnings, but they came back. This one hasn't really. Yes, it's bounced a little bit, but you have to understand we've been in a really, really bullish market. And this was a stock that was going up $20 every day a couple weeks ago. Now it's just struggling. And the thing, shorts are hard to come by in this market. But you got to look at the fact that every day this thing ends itself with a fade. If you look closer, you've got 2 wicks for the last couple of days. Every time it gets a whiff of that 348, it goes down. And I mean down. It's got some relative weakness against the rest of the betas and the way the rest of the market is working. So keep that in mind. I mean, if you do see a change in the market, like I keep saying, this is a short opportunity. I think at least for the short term, those $20 days are gone for this thing. Anything can happen. That could change in any minute. Don't quote me on that. But I think if you start seeing rips, launches, parabolics, and stuff like that, you have to consider shorting this for a trade. You got to take a look at that one. And then let's also take a look at the Apple. Yeah, let's take a look at some Apple. I'll tell you what, I'm going back and forth on this one. And maybe this is not even worth a trade. Maybe it's not worth a trade this week. I don't know. We're going to have to see. But here's why it's on my list. This thing has been in the doghouse for a while. And they guided lower, sales down, all that kind of good stuff, whatever. Stock was $200 October, and now you're all the way down here. But I tell you what, now that it's kind of like the theme here is, well, earnings weren't that bad. Some of this stuff is due to kind of revert back to some of the upper areas. So maybe for the short term, the selling is done, the panic is done. But you need a little work on this chart because the last couple of days, it's up a lot. And out of all the stuff that can be traded in this market, this one doesn't quite have my, I don't know what the words I'm looking for. I was going to say faith. It has my faith. Confidence, that's what I'm looking for. Confidence. There's other things in the market that are moving and are a little bit more consistent with the way that they move throughout the day than Apple. That's what I'm saying. But watch it here because maybe this flips itself and becomes a short. We're just going to have to see how the next couple of days. You got a long and short here on this one. It may actually pull back into the 160s or somewhere in that area. We're just going to have to see. It's doing a little bit of the Netflix thing by fading the last couple of days while trying to break out, but maybe it just needs a couple of days to digest. Anyway, I'm going to leave it like that. There's a lot of stuff out there that can be tradable. It changes from day to day, but keep your eyes on those levels at the market. If you pull up a weekly chart, you'll see that the market's gone up 6 straight weeks. I mean, maybe this is a week that delivers us a small pullback or a small little correction to digest some of this. Only time will tell. You just have to trade what's in front of you. Anyway, guys, as always, if you need my help, you know where I'm at. I want to thank you for watching this week's Market Mutterings. As always, I'm available to you at support@thelincolnlist.com. Trade them well, and I will talk to you next week.